All right, let's get going. Good morning, good afternoon, good evening, wherever you are on the planet. And yes, I've been told that I do have some aliens that do attend some of these workshops. So, how you guys doing? Welcome in. It is me. My name is EP. Good to have you guys in for a Wednesday workshop, the Traders Workshop. And tonight we are going to talk about micros. If you guys were in the Trade Lab today, you guys got a treat. Not only were you able to follow me on my bus and pick up a couple bucks, maybe a lot of bucks, I'm not sure what you guys did, but you had an opportunity to watch me do as I say. I'm going to just slow it all down today. But we did some micro trades today in the room. You guys might have noticed that I've been doing that for the last week. And you might be thinking, hey, why is he trading micros? This guy's got some pretty good performance, and why is he slowing it down? Just the opposite. Actually, can do more with, and it's all about that L word, leverage. Not only that, but I've been talking about for the last week that I wanted to do a workshop all about the micros. Perfect timing. I mean, there's so many people that are getting into trading, which is for me personally, it's rewarding. Trying to teach somebody how to play the game, how to invest in themselves, and how to go about your business. We're all different. You guys always hear me say it. We're all like a bunch of different snowflakes, different shapes and sizes of equity, different starting size accounts. And this is a great place to start your trading, which is to trade with a small account and test yourself. Give yourself a 90-day test. See what you can do with a small account. When I say small, guys, I'm talking $2, $5, $10,000. And the great thing is you could trade, guys. You could trade with like $500 with the micros. Okay, you don't have to have a large account to get going. So before we start talking numbers and getting into the education, I've got to put this little guy up here. This little guy is a big guy. It's called risk. It's called risk disclosure. So take 10 seconds to read it. It's a hypothetical, basically telling you in a nutshell that past performance is not indicative of future results, and that trading is pretty risky. And last time I checked, breathing is also risky. So everything in life is risky, but this is something that we have to do just to make sure that everybody here was told that there is risk involved in trading. All right, so now that we got that out of the way, here's the agenda that I'm going to be covering tonight. I'm going to be talking about leverage, how to get leverage to work for you, put it in your corner. I'm going to be giving you guys some basics. You guys can take some screenshots tonight. Of course, some house rules here. Recording will be sent out to you on this workshop within 24 hours. And of course, the advantage of being here is that you can ask me questions that pertain to you. And trust me, if you got a question, there's a good chance there's another 10 to 20 people in the room, if not more, that have the same question. So ask. This is an interactive room. At the bottom of your GoToWebinar toolbar, you're going to see an area where you can send me some questions. So get familiar with it. Please be a participant. Throw your questions out. I'll get to them as quickly as I can. I'll take some breaks, pull off to the side of the road, and answer those up for you. At the end of this webinar, this workshop, I try to keep it out an hour. At the end, I will go over some packages, pricing, talk to you about what our dynamic market indicators, how they're packaged up, what the prices are, and I'll also get you some contact information if you want to get this set up on your NinjaTrader right away, and you want to make some purchases so you can be up and running with me tomorrow morning in the Trade Lab, as we do every Monday through Friday. So, all right, now that we got the house rules out of the way, I'm actually going to do something tonight that I haven't done in a while. And I think this is pretty cool. So check it out. I'm going to launch a poll. Okay. I want you guys to take a second. Poll must be closed to enable screen sharing. Okay. So I want to see if you guys can help me out here. And it's just a little simple question. How would you describe your trading? So do me a favor and fill that out for me. I'll give you guys 10 seconds to just click on that. Just how it helps me, guys, to kind of like know who's in the room. It's amazing how many people we get into the workshops, and then there's like a big follow through. I know there's so much that you have to choose from out there. Maybe it's the title of the workshop that drew the interest, but it could be my voice, it could be my style, it could be my corny remarks, it could be my music that just drives you away. So I hope that's not the case. I hope you do come in tomorrow and Friday and the week after that and watch me do what I say. So we're going to walk the walk, talk the talk, put it all together. So thanks for doing that, guys. I'm going to close that poll. And it looks like the room is evenly divided on the first two options there. So just so you know who your peers are around you, how would you describe yourself? Yeah, you guys are 50-50 on that. And then I got one more, and here it comes. It's coming at you right now. How would you describe your net performance for the year? How are you? And guys, I'm talking about your trading. I don't care about your 401ks. I talk about you, what you're doing hands-on, your trading. And it could be your stock trading, it could be your futures trading, it could be your currency trading, it could be your Bitcoin. A lot of frustrations on Bitcoin traders. But just overall, where do you stand? Are you up? Are you down? If you're down, then you're going to be the last one. Are you killing it? A lot of people I always find are in the break-even category. That's why you're here. Can't get it out of second gear. Get it, been there, done that, and it's what I do to help you out. So I'm going to close that down. Thanks for that, guys. And 50% of you guys do fall into the third category, which is the break even. And I'll share that right now. Okay, now that I have that, I'm going to hide that, and hopefully we are back to business. It looks like we are. Okay. So thanks for that, guys. Thanks for the interaction. Also get you guys knowing how to work with the toolbar here. All right, so let's jump into it. Leveraging, getting leverage to work for you. So leverage, you know, the reality is you guys use leverage in your day-to-day lives and probably don't really stop and think about it. Those of you guys that own a business or have people that work for you, maybe you're a manager and you've got 5 people on your team. Maybe you manage some kind of a small business, whether obviously we're all doing it from our homes today. Maybe you were managing a small business. Maybe you're managing a large business. Maybe you're managing a lot of people. Whatever the fact of the matter is there, we're going to obviously take this and focus on trading. So, you know, the definition of leverage in itself is an exertion of force by means of a lever, pulling on a lever to actually have that object used in a manner that works for you, right? So the lever we're pulling on is trading some smaller units to be still a participant in a market. And I want you guys to think about that first example that I have on there, the ES, the E-mini S&P, the most popular futures contract on the planet. Hedge funds use them. Investment brokers use them. Small investors, big investors, family money, everybody uses the S&P, the mini S&P. And the reality is the leverage that you can get trading one contract rather than having to actually go out and buy stock in a number of the 500 companies that make up the Standard & Poor's, it's a no-brainer, right? It's a lot easier within seconds to buy, sell, or sell, buy, to take a short, to take a long, to cover that within seconds, minutes, days, weeks, than it is to actually go through the process of trying to handpick or buy all the stocks all together. So leverage, that's an easy example how to work it in your favor. The second bullet that I have there under examples for gold, I mean, actually, let's talk about crude. About 3 weeks ago, you guys saw what happened to the price of crude. Everybody said there's no way it's going to go below zero. There's no way it's going to go to zero. It's always kind of like one of those cliche comments that people talk about. Oh my gosh, look at this market. It's going to go to zero. And we all know the story on crude oil, right? Sub-zero, what was it, 37.42? Very, very deep in the hole. And the reality is there's people out there that will, again, buy, sell futures contracts versus going out and buying bullion gold or buying a barrel, 40 barrels of oil, crude oil in a barrel and rolling that into your garage. Can you imagine showing up? Hey, honey, went to Costco. Yeah. Got some toilet paper, got some paper towels, and got a barrel of oil. Yeah, what are you going to do with that? And how much is it worth? So the reality is you can actually just trade paper. And again, you're using that leverage to take advantage of a market, take advantage of a speculative position. So now that you're with me on the speculative position, we're talking now about how do we multiply, how do we actually use leverage to multiply our buying power or our selling power, depending on the direction we're going to take it. And this is all going to help us as we can use micros to actually amplify our returns. Now, we can also lose. We always know that anytime we take a trade. But what you guys are going to see tonight is when I go through and I actually calculate, and I'll show you how to calculate the risk on the trades that I do using a couple different strategies. One is a channel breakout strategy, and the other one is a turbo scalp strategy. One strategy, the channel breakout, is it's on a 5-minute chart. It might take 5, 10, 15, up to 30 minutes before you get filled. And you have plenty of time to manage the logic, identify the risk, and to set the trade. Okay, I like to call that the tortoise. The hare, the tortoise and the hare is turbo scalp, where you guys see me do this in the trade lab. It's like 95% of the trades that I do. These trades are going to go quick. You got to be on your toes. Yesterday in the trade lab, I think I had 4 to 5 trades out of the first 10 to 15 minutes. And I was not happy with that. Now, the net results were good, but I don't like it for the sake of new people coming into the trade room. If you haven't been to one of these workshops, if you haven't watched the basic videos, and you're sitting back and watching me do 3 to 4 turbo scalp trades in 10 to 15 minutes, your head is spinning, and you're probably going to leave. Not good for me, not good for you. Imagine you passing up a lottery ticket that was on the ground. You walked and you stepped right onto it, you stumbled upon it, thought it was just a piece of paper, and you never flipped it over to realize it was a winning ticket, okay? So there's an analogy I like to use with people that come and go into these different trade rooms. You can tell pretty quickly if you got somebody that is kind of like a used car salesman selling you something that's just like some widget that's hot today, but yeah, can you back test it, and how long have you been around, and how long have you been using it? Guys, here's the first gold nugget that I'm going to give you today. I'm good for about 5 gold nuggets in each one of these workshops. Here's the first one. First gold nugget is this. Any indicator, any coach, any trading philosophy that's out there, take that trading strategy, take that indicator, and apply it to a very large diversified basket of markets. How does it work? Does it work the same on a market in a completely different sector? Does it work the same on the 10-year notes as it does the crude, as it does the euro, as it does silver? Okay? And if the reality is it's a no, and have to have a whole nother set of inputs, then you kind of got some dog poop. Okay? Yeah, nobody wants dog poop. Okay? Why? Because it stinks. All right? So let me go further now and talk about the different micros that are out there. A little 101. Now I'm going to bump back and forth off of this PowerPoint. I've just got a few more slides, and then I'm going to go to some websites. Probably the best thing that you guys can do is go over to the CME's website, CME. The CME group has a great website that actually has some videos and it has some real easy to follow instructional vids and all the the real core basics. I'm assuming that everybody here has done some futures trading at one point in their life. If you haven't, that's okay. Definitely take advantage of going over to the CME though. Don't just come in and drop into one workshop and just take my word for the fact that you're going to learn everything tonight. That is not what this workshop is designed to do. What I'm going to do is give you some basics. I'm going to show you what I trade. And so when you come into the trade lab, you're going to know what's going on. So first and foremost, you guys see me trade a lot the Dow. That's my favorite. And there's a reason for it. It's really simple. The minimum tick value, each tick, one tick, when it goes from, I don't even know what the price is right now, but when it goes a minimum tick, it's 50 cents. Okay, and I want you to look at the leverage column over here. It's a 10 to 1 for all these. 10 to 1 to the mini contract. So these are all micros. These are the symbols. The micro E-mini S&P, the micro E-mini Russell, the micro NASDAQ, the micro Dow. If you take the M's off of those, okay, so ES, 2K, NQ, YM, those are the symbols for the minis. And so the leverage trading a micro is I can trade 10 micros for every 1 mini Dow. And so if the risk, for example, on trading a mini Dow is $500, and I'm not comfortable with that risk, I only want to risk $250, and this actually happened today in the trade lab, then I could actually trade 5 micros. Because if I traded 10 micros with a $500 risk, that would not be good. I don't want to risk $500. I want to risk half of that. Well, you can't do that when you're trading an E-mini Dow. There's no such thing as half of an E-mini Dow, right? So this is why micros are a great thing. For those of you that have smaller accounts and you only want to risk $100 in that example that I just gave you, well, then obviously you would only trade a fraction, like 2, maybe 3 of the micros. And we'll go through and I'll show you some examples of this tonight. So these are the ones that I trade in the trade lab. Most often you'll see me trade the NASDAQ and the Dow. It's because it's easy for me to follow. I like the tick value. I like the movement. I usually use the E-mini S&P as an indicator. I actually look to the E-mini S&P to indicate if there's going to be some further movement up or down, depending if we're in a trend or a counter trend with these other two. So, and I have not traded the micro or rather the E-mini Russell in ages. When I first got in to trading, I used to trade the Russell a lot, but since then I favor the other two, the NASDAQ and the Dow. So there's the stock indices. Other markets that you can trade, gold. Another one that I've become a big fan of. Gold, because of the volatility, the risk has gone higher. Because of the risk going higher, I have started trading the micros. And the micro, same thing here, the leverage, 10 to 1. So you could trade 10 micros for every full lot of gold. And I think gold had a $300 risk today on one of my trades. And rather than trading a full lot, think about it. If I'm only trading one contract, guys, where do I scale in? Where do I scale out? I can't. Kind of like living and dying by that one contract. Well, if I trade 10, it's the same thing. But if I don't want to risk 300 and I only want to risk $100, then trade a third of 10, which is roughly 3, right? 3 micros. And that's how I can reduce my risk. And the great thing is when you actually have a trend where we stretch from the bull bear levels, and this is where I'm going to pause and take you guys over to the levels and the zones. When I actually have a market that stretches from one level to the next, so from the, I got to get a different color here, stretches from the bull level all the way up to the first level of resistance, the next level of resistance, and maybe even to the last level of resistance. If I only have a one lot of something, that's really hard to actually get to that finish line and wait it out. Why not take some profit targets along the way? Okay, and that's what this is all about. So I don't care what size account you have, micros are a great way for you to leverage and take advantage of scaling in and scaling out, especially for those of you that have like a $5,000 account and smaller. I'd even say 10,000 and smaller. And let's not forget about what the margins have done. We've seen the margins from your brokerage houses go up, double, 3 times, 4 times. Think about crude oil, what it was doing last month. I think crude oil for a mini went up to 5,000 or 6,000 for a mini, not a micro, a mini. And that's for day trading. That's because of the excessive volatility. So here you have gold. And then, of course, I just mentioned crude oil, which doesn't have a micro. Crude oil's got the mini contracts, the QM. And then the last group I'll talk about, I know it's a little blurry. This is because I literally just copy pasted it right out of my NinjaTrader. And this would be going right up here into the description, typing in micro. And just like that, you can see all the micros that I have available to me. And of course, it's based on your data vendor. Talk to your broker, talk to your NinjaTrader team member to get you set up with the right connection to get the micros. So you can see that I'm set up to have the currencies, the indices, and gold. Okay, and then you can see the symbols here. You can see the minimum tick size and the point value. It's all located right there for you inside of your NinjaTrader. So once you actually get one of these, all you have to do is highlight it, click on the left arrow, and that'll push it over here to the left. I already have this one, so that's why it gave me that error message. So you can see all of my symbols that are over here. So for example, gold, there's the full contract. So if the risk isn't too high, I'll trade a full lot of gold. If the risk is like $100, maybe even $150, I'll trade 2 full lots of the gold because I'm comfortable risking $250 to $300 for any individual trade. That's me. That's on a $10,000 account. If I have a $5,000 account and the risk is $250, that's way too high. So I've got to go trade the MGC. That's the micro gold. And I will trade 5 micros rather than trading one full lot. Okay, and I'm going to show you guys that on some charts here tonight. So you got the indices, you have the gold, you've got the currencies. And let's go actually now go look at one of these charts. Before I do, any comments, questions, concerns? We're 23 minutes in, third of the way there. How are we doing so far? What are some of maybe the common questions that you guys have about micros, especially for those of you guys that have never traded them before? And while you're putting your questions together, let me show you something that's available to you. This is through NinjaTrader, and this is great for you to stay updated with the margins. I got this from my NinjaTrader representative. His name is Sean. I'll be more than happy to share his contact information out with anybody that needs it. But this actually keeps me up to date with the current margins for the E-mini S&P, the micros as well. I mean, look at that, guys. Margin right now for the micro E-mini S&P, right? MES is $50. Current margins for the E-mini S&P is $500. The micro, $50. So again, if you got if you can only put $500 together, think about it. For every micro, it's 50. You could trade 10 micros with $500 in your account. Now, I don't recommend that. If you can only put together $500, that's all you have to start. You know, you're going to need to trade like 1 to 3 of these, okay? Because you're not going to make money in every trade, and you're not going to just step in and get a home run. But realistically, it's funny because for the number of years, I've always told people you really need about a $10,000 account to start. But because of micros, you can actually start now with about $2,500. Okay, now you got some other costs that are involved when it comes to NinjaTrader. You're going to have to pay for your monthly lease. Now you can buy it outright. You can buy NinjaTrader guys outright for about $1,000. But obviously, if you only have $2,500 account to start with, yeah, that's probably not going to be up your alley. So you got a monthly lease, and I'm going to tell you that's roughly, or I think the lease is like around, let's just call it $279, give or take $10. I don't know what it is off the top of my head. I'll let you guys look into that for yourselves. But that's going to be one of your costs. The other cost you're going to have is for the data, okay? And you can talk to them. They have different packages. And right now, I think they've been commission-free on the micros through the end of this week. I can tell you right now that you'll have to talk to your NinjaTrader representative and get a cost out of him in terms of, hey, what's it going to cost for my data? Just tell him or her what you're going to be trading. Hey, I'm going to trade micros, I'm going to trade stock indices, I'm going to trade some currencies, and I want to trade gold. That's all going to be delivered to you at this fixed cost every month. They'll give you that cost so you can stay on top of that. So you got your monthly cost just for the platform. You got your monthly cost for the data. And then the third thing you have is the commission, okay? And I can tell you right now that the commission costs, they wrap up the commission into the data, so you can talk to them about having it all wrapped up together. I think the more data you get, the lower the commissions. And they got just like 1 or 2 different packages to choose from. So where I'm going with this is that, you got some fixed costs here, but you can trade micros with a smaller account, which is pretty darn cool when you think about what the margin requirements are for day trading. Let me make sure that I do stress that word, day trading. That means you are out of the market by 4:15 Eastern time, okay, for the stock indices. Just make sure that you're not holding anything over. Sometimes they'll actually automatically just kick you out of a trade if you're trying to hold something overnight. They have some triggers that will do that. So what's cool here is you can keep an eye on the margins. And by the way, that website right up there is ninjatrader.com/blog/order-desk-updates/. And if you guys are watching this video, you can obviously just look at that and zone in on that and go right to that website. So pretty cool. All right, so the other website I'm going to take you guys over to is the CME. Okay, so this is just type in CME group and type in micros, and it'll take you right to this website. Another good place to start because you got some education in there. You got some all sorts of good information that you should spend some time on. But here you go. Here are the 4 leading indices, the ones I just showed you. Okay, and it gives you like the current pricing. Of course, this is delayed, but it does give you some information. But the cool thing is you can click on any one of these, and I'll just click on my favorite, which is the Dow. And this is going to give you all the basics that you need to know about that market, right? It's going to tell you the tick value, the price per tick, and the point value. Then you got some margins in there and everything you could imagine that you need. So again, that's the CME's website. Highly recommend you guys spend some time there. Now, with that, I'm going to take you guys now over to some of my charts. And I'm going to talk about a couple trades that we had today. And then we're going to talk about some other ones for you guys to trade. For those of you that trade the London session, I'm going to stare at some currencies for you. We'll actually look at the live session tonight. And then I'll also take a look at the London session from last night and the one that's coming up today. Okay, so this would be the micro, MGC, micro gold. This is the June contract. And I've got the plots on the screen right now. And I'm going to take those off in a second just so we don't have too much confusion with too much up on the screen. But again, this is the big picture. Okay, these are all of our levels, all of our zones. And this particular trade took place inside of bear zone 2. Bear zone 2. So this is bear zone 1. And this is bear zone 2. And this is bear zone 3. Okay. Now I'm going to get rid of all these plots, but I just wanted you guys to see this because you can see that I traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 micros. Now, why did I take a 10 lot trade on this today? So just give me a second. I'm going to go over here to data series, and you can find the plots for the markers on your screen right down here underneath the trades. See where it says plot executions? If you just click on that, you can actually take the plots off altogether. Just have the flags or have the text and the flags. It's up to you. I want to just see the flags, the markers. So hit apply, and that makes it a little easier to look at. Okay, now I told you guys I was going to help you guys out with calculating risk. Okay, this is the real easy, quick, and skinny way to do it. I'm going to take that off. Any particular time that you're going to start looking at the market, and let's just say that we're over here. What I'm going to do immediately is I'm always just going to look at the distance between the moving average and the upper band, or the moving average and the lower band. If I'm thinking about taking a short, just look at the differential between this, just look at this gap, or the gap between the moving average and the top band, and that'll actually just give you a guesstimate or an estimate as far as how much risk there is. Now, I was actually interested in, for this particular trade, I was looking at taking a short in this market. So while the market was starting to come into this neutral trade zone, the first thing I started to do is I looked at the distance between the moving average and the top band. Okay, that's going to give me an idea of how much risk that I'm looking at. You're never going to know until you put a crosshair, okay, right up here at the top, until you get a crosshair. And I got to move my GoToMeeting or GoToWebinar out of the way. And what I'm going to do is I'm going to put a crosshair at the moving average, look to the far right, and see 1699.3. I'm going to go directly up to the top band, and I see 17015. Okay, so let's just get a calculator here and do that calculation. So roughly, and by the way, this was at 10 o'clock this morning, 10 o'clock Eastern. So 17015 minus where the moving average was, roughly 1699.3, 1699.3. That is 2.2. Now, for every full point, when we go from 1699 to 1698, or 1699 to 1700, one point, okay, not one tick, but 1 point is going to be $100. Okay, it's $10 a tick for the full contract. For the full contract, okay? In the micro, it's 10 cents a tick, and it's going to be $10 for every point. So from 1698, I'm looking over here on the far right, guys, 1698 to 1697, that distance is $100 on a full lot and $10 on a micro. Okay, so if I just have 2.2 on the distance between the moving average and the top band, that's 2.2. What's my risk going to be on a full contract? It's going to be 2.2 times $10 a tick, $220. Now, when I looked at this trade today, I said, well, it's $220 at risk. I'm really comfortable at this point in my day of risking about $250. So I knew I could take the trade if I got a qualifier. But the problem is that I was only going to be able to take a trade, whether I was going to use the moving average or use the lower band, which I obviously did. I was only going to be able to take one lot for a full GC. That's the gold contract. That's the full. That's the Big Daddy. Okay? So Big Daddy was going to cost me, or yeah, not cost me, but was only going to enable me to trade one lot. Because if the market went back up here and stopped me out, I'm done. And I want to leverage, I want to apply leverage so I can take advantage of scaling. So instead of trading one lot, the other option is to trade 10 micros, MGC. Now remember, the risk on this trade was roughly $220. So if you want to get precise here, if I'm comfortable risking $250, I'm actually comfortable risking more than the 220, like putting my stop a little bit higher. I could actually trade, I could have actually traded another 1 or 2 micros. Now, I'm not going to like spin your guys' heads. I'm going to try to keep this as simple as I can. But I just want you guys to see how that works. What if I was not comfortable risking $220? What if, for whatever reason, I've gotten beat up earlier in the morning, or I'm very close to my daily profit target and I don't want to risk $220? I only want to risk $100. You guys can do the math. Trade 5 micros. Now wait till you see the Dow trade, because the Dow trade, those of you guys who were in the trade lab today, you guys remember what happened when I got in and immediately I got stopped out of half of the contract size? Okay, so hopefully you guys get that. And now watch what's going to happen. So here is where I shorted 10 micros. I did this based off of the previous bar that was a qualifier. It closed right on, actually a little bit below the lower band. This was inside of a neutral trade zone. I placed my sell stop right below the RQ level, which is also the beginning of bear zone 2. Okay, remember, that's the beginning spot of the second zone for selling. Okay, here's bear zone 1. Where is the beginning for bear zone 2? Right there. Where's the beginning of bull zone 2? Right here. So we like to buy low, sell high. By the way, selling at the beginning of bear zone 2, I'm selling at the top of the zone, but I'm not selling as high as perfection can be. Perfection is going to be selling at the high point of bear zone 1. But nonetheless, this is the secondary spot for a selling opportunity here on the gold. So this is where I sold 10. My protective stop. My protective stop on this one, since I'm using the moving average, I'm sorry, my bad. Since I'm using the lower band as a qualification, I'm going to be using the moving average for protection. So for purposes of making this a clean chart so you guys can follow, my stop is going to go right up above the qualifying bar, which is the one that has a circle on it. I'm about to put that in here for you. That's the qualifier. The stop is going to go right back up above that bar, up above the moving average, coincidentally up above an RQ level. And that's a great thing. I've got these levels now. After I get short, I have these levels that now act as resistance markers. They were once support markers or support levels. Now they're resistance levels. So you can see that the market immediately started going against me, going back into the neutral trade zone. But my stop was right up here. Okay, and guess what I started doing once we started closing down below the level? I started trailing using the moving average. Every minute, I can just trail. That's what I call the lazy river. Now, what happened here? I got a profit target. And this first profit target, remember, I've got 10 of these. The first profit target, I elected to start taking some money off the table. This is what I refer to, and there's a little bit of the money management workshop in here today too. You guys are probably picking up on it. I elect on my very first profit target, I have a fixed amount of points that I want to take money off the table. And for me, for gold, if I'm trading a full lot, it's usually going to be $100, and that would be 10 points. On the micro, I'm going to actually have that be 20 points. So if I put the crosshair back up here, my entry was roughly at 1696.3, and I ended up getting the first profit target at 1694.4, just about 20 ticks. And that's where I started scaling out. I believe I scaled out of 3 of the 10. Let me just put the marker back up so we can see that with the plots, the text. 1, 2, 3. Okay, so I sold 10 out of 3. Fixed. This is what I call the grab and go. Grab some and let it go until you get to the next profit target. Now, the next profit target along the way on this trip, this voyage, is going to be at the 50% marker. Now, how do I know that that's 50%? I go up here to the pencil and I grab the Fibonacci retracement ruler and I drag it starting from the top level down to the bottom level, the zone, if you will. And take a look at where I placed my target, just a little bit up above it. And what did I do? Well, I started with 10, scaled out of 3, that leaves me with 7. I scaled out of another half. I rounded down, so I got out of another 3, which left me with the remainder of 4. My next target is going to be at the bottom. Okay. Oh, I'm sorry. My bad. No, next target was the low of the day. Look at this. See this white line down here? That is the low of the session. We put that low in back at 9:20. And here we are an hour and 20 minutes later, taking that low out. I had my target right before the low of the day. And that's where I scaled out of another 2. So started with 10, scaled out of 3, that leaves me with 7. Scaled out of half, that leaves me with 4. Scaled out of half, that left me with 2. And guys, I missed getting the bottom today by a tick. I had my limit order a few ticks off of the bottom, right above it, and we came right to it, and it had to trade through by a tick for me to get filled. I didn't get it. And so what I did is I recognized, you guys see the yellow dots? See that yellow dot there and that yellow dot there? That's part of the RQ-OBOS, the overbought, oversold indicator that we have. That's telling me that the market is oversold and that there's a potential for this thing to start giving back. So I brought my stop down. Remember that trailing stop I was telling you about? It was way back up here. I've been trailing. I withstood the pullback. I've been trailing. Once I got the RQ-OBOS, I brought it down and I locked in profit. There's no way I was going to let that thing run all the way back up and give up on the last 2, especially when I came so close from grabbing the profit at the bottom. So there's a great example on gold, micro gold, how to take advantage rather than trading one full lot that had $220 of risk. I traded 10, and the net result, $220 of risk. Let's look at the net result today from the trades. And you're going to see it located down here. There they are. 20, 40, 60, 150, 200, and 81. Gosh, I got to add it all up. That's a lot. 150, 160, 320. Plus another 90, 420. Guys, that was let me just make sure that that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, Just want to make sure that was all one trade. Here, I'll just calculate it for you guys. Do the math with me. Starting with this guy right here. We got 20, 40, 60. Then we got roughly 150. And then we got 2 at 81. That's 160. And then we got the last 2 remaining lots at 72, which is roughly 144. It's a $514 trade, guys. Risking 220. Reward is 514. That's a 2-for-1 risk-reward ratio. Now, do all trades do that? Are we going to get the trend to always go to the bottom? No. But you have to be in it to win it, and you have to give yourself a chance. When you're only trading one full lot, it's tough to make that decision where to take money. Some people will just stay in for 5 to 7 minutes. Others will take the money off when they see it pulling back up. Some people will take money off halfway down and then kick themselves when they see the market go all the way to the bottom. Any questions on this gold before I move over to the micro Dow? I'm going to go take a look at the Q&A box here. If you guys have been quiet, then that means I can keep moving. If you have any questions, send them through. I'll get you guys contact information here in T-minus 15 minutes to send us questions if you want to talk offline. No problem. All right, we're going to move on. We're going to move on to Dow, and then I'm going to get to the currencies. We're going to stay with the U.S. session because we're going to talk about another trade that took place today in the Trade Lab. It's a big reason why I like to talk about these trades is because I did them, and you guys can see what I do tomorrow. Okay, so this was an interesting one. Similar to the last one, prime time for trading the stock indices is 9:30 to 11 o'clock. Prime time. That's another workshop. If you haven't seen it yet, definitely keep on the lookout for that next one. Okay, so there's the prime time for trading when the stock market opens up for the stock indices. Now, you can trade earlier, okay? You can trade as early as 8 o'clock. Absolutely nothing wrong with that because the core U.S. prime time is 8 to 11 for the morning, but you've kind of got like this acceleration that takes place when the stocks open up in New York, right? Now, I jumped in and I recognized based on what the S&P was doing. I want you guys to watch what happens here. I'm going to go over to the S&P and show you guys the first 10 minutes of what the S&P was doing this morning. I think I thought I might have had a chart here. There's the S&P. Let's pop it up here. This is on a 5-minute. And I'm going to go back and show you guys at 9:30, which is right here. Yeah. Okay. Look what the S&P was doing 5, 10, 15 minutes. S&P was pulling back. Okay. Yellow candles are showing me that it's neutralizing. The purple one is showing me that it's actually weakening. The S&P was giving up on the profits that it was trying to make, the run that it was making halfway up into the zone before 9:30 hit. That line right there is 9:30. Stock market open and sold off at the open. It was pulling back down into the neutral trading zone. Okay, now that you know that, because I like to use the S&P as a marker, an indicator, the Dow was doing the same thing. Okay, now this is the micro Dow. Now what's the first thing I'm going to do? Guys, I'm going to start looking at the risk like I did for the gold right here. I'm going to recognize what's the distance from the moving average to the top band. I'm going to go get my crosshair so I can measure that for you guys and tell you what it was. It was roughly 23,909 to the top was 23,930. 20 points. That's $100 in the big contract. $10 on a micro. I could have traded out of the gate if I was ready to take a trade. I could have traded. If I'm comfortable risking $200, $300, I could have traded 2 to 3 big contracts, or I'm sorry, mini contracts. Now let's look at what's happening as the market continued to spill off here. I was looking to take a trade inside the neutral trade zone. If I take a trade short at the beginning at the bull zone, think about it, guys. My crosshair is at the beginning of buying territory, bull zone 1. That circle that you guys see there, That was the qualification for a short using the turbo scalp strategy. Okay, let me get rid of this markers here. And what I did is I said, well, I'm going to plant a sell stop in the neutral trade zone. And I'm going to use a white arrow here just to give you an idea of what a sell stop would be looking like. And if it comes down into the neutral, that's where I want to short it. Now, I remember this trade very well this morning. I was actually looking at gold, which I was in, and I was looking at some other markets. I was scouting some other markets. I popped back over to this screen, this chart, and I saw the Dow. Those of you guys who are in the room, you're going to remember this. I was like, oh, man, I missed it. The market has come down, and I missed getting short. The market intra-bar was going back up. It was kind of bouncing back and forth in here. And so what I did is I said, you know what? I'm going to jump on it. I'm looking at the S&P. I'm watching this market coming from bull territory. Most importantly, I was looking at the sentiment. And the sentiment, we were risk on, which shows you here with the dynamic market sentiment indicator that we give you. It's part of the RQ 2020 package. But I knew that we were close to turning to a mixed sentiment, which we did later, yellow. And I said, God, if the S&P goes into bear territory and the notes are already in bear territory, we're going to see conflict, blue, which we actually saw that today too. So I was able to predict what might happen and how to prepare to trade for that. So I sold, and I believe I sold 10. And the reason for that is because I measured approximately where my entry would be up to the top, not the top band, but the moving average, that distance right there. A hell of a lot larger than what the risk was out of the gate. 2 times as much. Do you see that? I'm going to measure it for you right now. The risk on that white arrow that's pointing straight up was roughly, I can't see because my toolbar's in the way. There we go. 23.18 up to the moving average, 23.892. So let's just call it 20 to 90. That's 70 points. Okay, here we go. 70 points times 5. That's the minimum tick value on the big contract. That was a $350 risk. And I was comfortable in the first 15 minutes risking around $250 to $300. That's on a $10,000 account. Instead of trading a 1 lot, I traded 10. And truth be told, if I only wanted to risk 300 or even 250, I should have traded about 7 or 8 micros. Now I'm going to turn this on so you guys can see how many I did. I'm going to turn the plots on here. Text and marker. How many did I do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I did 10. I was risking $350. Now, I had a lot of things working. It looked like the S&P was piling down. I used the list of logic. I didn't have a lot of it. In fact, I still have this from today, guys. That there's the crude trade I did. There's the Dow trade. There's the gold trade. Looking back, the probability was low. It was a 1. As I look back at this, I traded too heavy in this trade. I should have probably traded about 5 or 6 micros. Minimize the risk based on the location. Minimize the risk based on the probability. I'm not going to lie to you. I traded a little too heavy here. It was like trading a 1 lot, but I traded 10 micros. And what happened to me 4 minutes after I got into the trade? 1, 2, 3. Stopped out, but not out of all of them. What do you guys recognize with that stop out? That's not the distance that I just showed you guys. What I did is I said, well, here's the deal. The risk is going to be going up to that moving average. That's where I'll have my stop on half of them. And again, the leverage here, if I have a 1 lot, I have to make a decision where I'm going to get out. When I trade micros, I can split my stops. I also use the RQ level as a stop, and it got hit 4 minutes. But what happened is I took half of my position down. I was able to lessen the risk, recognizing the $350. I said, well, I'll lessen the risk because the distance from my entry, which again was around 23,820, up to the RQ level, which is at 43, that's about 20 points. Plus, I'll give myself a little cushion, call it 30 points. 30 points on a full contract for the Dow is going to be 30 times 5, $150 to the first stop out. So what did I just do there? Well, if the risk to the top was 350 and I take half of my position down, if I was to get stopped out at the moving average, I would have lost $175 there. And getting stopped out at the first stop out that I have, that you can see where I got hit, add $150. So it's a little bit less risk. Not a large amount, but it was a way for me to reduce risk nonetheless. So what happened next? Well, I have 5 remaining units. Now I'm going to take the text off just to make it easier to see the screen. You guys can see the net result. I got into the trade, and I got stopped out of half, stayed with it, had my stop back up using the moving average right back here. Lazy river was in effect. Trail, 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 trail. What happened here down below? That was my first fixed target, fixed amount of points. Took my money off the table. What did we also have going on down there? We also had the low of the day. That was what the low of the day was. And look where my target was. Right down there close and just a little bit above it. So this is where I started scaling. Scaled out of half. I had 5, I got out of 2. I had 3 left. There's the 50% marker. Again, go get the Fibonacci retracement ruler, draw from level to level. There's the target. So, had 10, stopped out of 5, 5 remaining. Got out of 2, 3 remaining. Got out of 2, 1 remaining. I have 1 remaining. And what am I trying to hold on for? I'm trying to hold on to see if we can get to the bottom. We didn't. In fact, what's that green dot? That green dot is the RQ obos. That's showing me a potential retracement, which is exactly what the market did. But I'm not interested in taking those trades in the middle of a zone. All I did was just continued to trail, Now I can't lose at this point. Look at my entry. My entry's over here. I'm now locking in profit, and stopped out on the last remaining unit for the micro Dow. And the micro Dow, starting right there at the shaded, highlighted column, made $31, $31, $31, $93, then $55 and $51.50 on the next two. Let's call that $110. So let's call it easily, just rough it off, $200, $200. And just to make sure I've got that, that was the 5. Now remember, I got stopped out on the first 5, 1, 2, 3, 4, 5, and then made money 1, 2, 3, 4, 5. So now you guys can see how I scaled out of the trade. Now you can also scale in to trades, and I'm going to try to showcase that, and we're going to go over and look at some currencies. And I was looking at some of these before we started today, and I'm going to pop up one here to share with you. And I think it was in the Aussie. And for kicks and giggles, guys, guess what this one is? This is Bitcoin. This is Bitcoin futures. That's right. 5-minute bar, and this is a live market. You can see my bar timer happening down here. Now we're still trying to come off the critical resistance that it hit earlier, and there was a trade back over here that I'm going to showcase for you. As I said, guys, any market that's got volume and volatility, it doesn't matter. We can apply it. So this is a currency in a sense, right? Synthetic Bitcoin. Let's take a look at it. This is the European time, prime time, 2 to 5 o'clock. Actually, my bad. 5 o'clock is right over here. 2 to 5. And this is going to be not the turbo scalp strategy, but the channel breakout strategy. Now you can see all the yellow candles. Obviously, we're in bull zone 1. You guys know by now that that green level is the bull level. The bottom one is the bear level. And now what I have is some blue channels up here. I'm looking for a breakout, but I'm also looking for a blue candle. And what would also be nice is doing this near the beginning of prime time with the 5 accelerator underneath it. It's kind of like a golf shot. Can I get all these things to come together so I can swing the golf club, hit the ball, and try to get 150 bucks or 150 bucks, 150 yards out of this 8-iron to get on the darn green as I'm trying to approach the green, or I'm trying to drive 300 yards off of the tee box. It's not easy to do. Practice makes perfect, right? So the reality is, same thing here with the trading. I'm trying to add as many logistical things in my favor as possible. Time is one of those things. Here's a little cheat sheet for you. That's the logic. What's the sentiment? What's the trend? What zone location are we in? What is the RQ Tech telling me? RQ Tech is this guy over here that's telling me what's leading, what's lagging. This is built into the NinjaTrader market analyzer. It helps me recognize things in green or things I probably want to buy. Things in red, I probably want to sell, but not just based on it being green or red. I need to apply the list of logic. So, no, I'm not buying here because I don't have a candle that's turning blue. Am I buying over here? Yes. We're going from yellow to blue. We're breaking through a channel. Again, I don't care what market this is. This could be the dollar index, could be the Aussie, could be live hogs, could be corn, could be copper, could be S&P, whatever. Don't care. Just giving you guys a logic. And this is a 5-minute candle. And you almost got the top in the same 5 minutes on the break. These red dots down here, I have showcasing where you're going to place a stop. If that's too much risk going all the way back down to the bottom, the opposite side, then use a stop underneath the bull level at least. Now, I don't know what the risk was on this one, but let's just keep this really simple. Let's just say that the risk on this market from the entry point down to that first marker for a stop, a protective stop, let's just say it was $200 of risk. Okay? And you're comfortable with that. Bad example. I'm sorry. I'm going the wrong way. Let's say it's $100 of risk and you're comfortable risking $200. Then this is going to be a 2-lot trade. And you're going to try to get out of one here and you're going to try to get out of another one here. Or maybe you want to let that thing run all the way to the top critical resistance level. That's up to you. How much time do you have? Are you going to be able to watch the trade? Are you comfortable taking the money off here and, just forgetting about it? Or do you want to let this thing run for the rest of the day, maybe for the rest of the week, maybe for the rest of the month? Slim chance on doing that. Usually those type of swing trades can last for about 3 to 4 days with that type of strategy. But the reality is you guys can see what I'm trying to do here. So if you were going to do originally 2, okay, 2-lot here. Let's see what would have happened as we go forward. Here's your stop. Trail, 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 trail. You're not moving that stop, guys, until we get above both of the yellows. Well, look what we have here. We got a profit target, ladies and gentlemen, on Bitcoin from a trade that started at 4 o'clock in the morning. There's your first profit target. There's your first one. I'll put a circle around it. Not that I need to. You guys should all be able to see it. Okay, not that I need to, but you guys should all be able to see with a break. Okay, bull zone 1, trend following trade, and now you got a decision to make. Are you going to get out at the next level, take the money and run, or are you going to let this thing continue higher? You tell me what. Now, if you're trading micros, and let's just say that this was gold or the Dow or the Euro or the Aussie, and the risk was $100, hypothetically, as I said earlier, and you could trade 10 of these, but you only want to do 5. You don't want to risk as much. What about this? What about getting into 5? Taking half. We'll go over. We'll take 3 off. Buying 5, scaling out of 3. You ready for this? You ready for this? Guess what I'm going to do here? You're in a brand new zone, bull zone 2. You could have done 10 originally. you're down at this point out of scaling out, you're down to 2. Why not add another 2 back? That's right, scale in to the trade. I'm going to put the word add to. So now you're net long 4. Halfway up into the zone, which coincidentally almost happened on the same bar, the same candle. If you didn't get it there, you definitely got it 10 minutes later. And you're able to take 2 of the 4 that you now have in out of the trade. And you got 2 left. Mind you, this stop, once you go up above both yellows, is coming up and is right underneath the yellows. Trail, 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 trail. And look at that, boys and girls. You got up to the top and were able to take your last 2 contracts off in this example at the very top. So there is an example of scaling out and an example of scaling in. And by the way, if you didn't catch it, that is Bitcoin. I can do this with the Aussie, the pound, the Canadian, the euro, the yen. Any questions before I move on? Now, on a scale of 1 to 10, 0, that this has just been the worst wasteful time of your life. Give me a 0. 10, you're learning a lot, the light bulb's going on, and you're digging what you're listening to. This logically makes sense. Or you can give me a number anywhere in the middle. This is where I get you guys to give me a barometer check. How are we doing, guys? How are we doing? Let me hear from you. Come on, Arnold. Talk to me. Dave, Dwayne, Ed, Gary, Gene, George, Gordon, Gus, Lisa, Margaret, Brian, Roger, Sally, Rick. Give me your numbers. Which you feel good. I can't list everybody, guys. I'm out of breath. All right. If you guys are good, I'll give you one more. But before I do, I'm going to just jam over here because you guys got to know who to contact. I want you guys to write this down. EP Money. EP Money is your promo to get a deal out of Tim. Okay? Tim at Rios Quant. That guy will help you with packaging, prices, membership, everything. Support at Rios Quant if you need help with your indicators. You guys should all be in a 5-day pass. If you haven't done that yet, get your butt over to thetradingroom.com and get in front of your computer tomorrow morning at 9 o'clock Eastern when Joe opens up the room, and then strap in a 5-point harness by 9:30 because that's when I take over. Package and pricing. Here you go. Now, if you guys are interested in micros, I know you're looking at this going, oh my God. I get it. Let Tim know you're trading micros. Okay? Talk to him. We'll do something for you. This one I can't help you out with. Just like just like your Netflix, just like Spotify, just like NinjaTrader, you got a monthly fee, man. We all got bills to pay. Members, you probably don't have this one yet. I trade it just about every other day in the Trade Lab. I do 95% of my trading with this one. If you just want that, I don't know how you trade it without the levels. So I'm talking to the members right now that don't have scalp. But if you want everything, the levels, the RQ Tech, the dynamic market sentiment, the accelerators, the channels, the OBOS for retracements, and yes, the scalp. Guys, that is the best deal on the planet. That is the biggest no-brainer in trading. Because you know what else you get? Until I start charging for them, and I'm pushing Joe to do that, these workshops are free or included as a member. That's going to go away. I'm going to start charging for the workshops because this is priceless information helping you guys make money. So if I've done anything tonight to help you take a step in the right direction, then my coach's creed is invest in you, buy in. Okay? I know that some of you guys tonight have come from some of the universities of trading and trade school of this and trade school of that, and great. Continue to do that. But make sure you're investing in something that feels good, that you can make sense of. Imagine you being able to trade a market like the, I don't know, random. Let's go to the dollar index. Imagine you being able to explain to people what zone the market in as we speak, live market. The dollar index is trading in the secondary bull zone. It is sitting right above a second level of resistance. The dollar index today had a rather gnarly breakout in the London session. 2 of them, to be exact. Prime time for London. Guys, I randomly just chose this market. That's not what I wanted to do. Let's do this again. Prime time, London, 2 o'clock. Is this sinking in yet? Is the light bulb going on yet? Can't make this up, guys. 2 to 5, prime time. Do you see a trade inside there? By the way, don't show up at your desk at 2 o'clock. Get your butt in front of the computer a little bit earlier. You guys ran a 7-Eleven, and 7-Eleven I know is a 24-hour store. But if your shift was to start working at 10 a.m., you don't show up at 10 o'clock and put your shirt on. You got to get in front of the register and be ready to rip. Okay? If you're a police officer and your shift is 6 in the morning, you don't roll up at 5:55 and change into your clothes. You got to be ready to go. If you work in a hospital, God bless you if you do. We all have somebody close to us that probably does right now. Those are the champions right now. Those are the soldiers on the front line right now. You got a shift. You're a nurse. You're a doctor. Guy across the street from me, he's one. He gets there early. Same as a trader. Get there early because some of these trades take off early. Look at the color change, yellow to blue, breaking a channel, bull zone 1. Oh my God, it might stop me out. Yeah, it might. But guess what? You're going to measure the risk. You're going to measure the distance from 99.90 down to the first level, which is 99.81. Ladies and gentlemen, the dollar index is $10 a tick. That's $100 of risk. I'm comfortable personally. Why? Because I have a $10,000 account. I can risk $200. I'm comfortable with that. That's actually $150. So this little red marker I'm going to put on the screen here. It's going to represent the stop, the protective stop for this trade this morning. And that distance is about $150. If I was comfortable risking $300, forget that. Let's say I'm only comfortable risking $200. The distance right there from the entry down to the stop, that distance right there is $100 approximately. I could do a 2-lot. This is a 2-lot trade. Okay? My first target is going to be the 50% marker, 50% of the way up. We never came down. We threatened my stop one time, did not get hit. And what did the market do? Took a while. Got to be patient. Patience pays. Now, 50% of the marker actually took place. I take it back. 50% of the way took place 5, 10, 15, 20 minutes into the trade. I overlooked that. So you're taking a little bit off. That's the grab. And this is the go. The grab and the go. And guess what? What are you doing up here in the second zone? Well, prime time's over now. So you're doing nothing. I don't care where the market goes. You've made your money. If you're still in a prime time, you could consider taking a long up into the second zone. Higher risk, buying high, not buying low. You could wait to the prime time for the US session, which is 8 o'clock, which is over here. And what's the market done? It's sagged down. You're waiting to buy. Are you buying here? No. You're right underneath the resistance level. You're waiting to get into the zone to buy here. Never happened. Oh, but wait. Oh, but wait. When is prime time over for the US session? 11. 11. Am I going to buy here? No. That's a neutral trade zone. I'm waiting to buy in the secondary bull. Finally got an opportunity, but you're not taking that trade because that is the end of prime time. You're done. So as I look at the dollar index, going all the way back to the London session and the US session, there was one trade today, guys. It's in the London session. And you always hear me say it. Currencies, best time, London session. Whew. All right. So we went over tonight, 912. Sorry. I get going. I'm like a doll. You wind me up and just watch me rip. That's what I'm going to be doing tomorrow. I invite you guys to come in and trade with me. Again, packages, prices. I'm going to hang back here for 5 minutes. I'm going to kill the recording. Those of you guys watching the recording, reach out and touch someone. Touch us. Talk to us. We're here for you. We want to talk to you. We want to help you with your trading, help you succeed, help you turn your machine around. It's tough enough with what's happening around the world. Let's not make your trading tough. Let's make it easier. Okay? I hope I can help, and I hope that you guys enjoyed tonight. Again, my name is EP. Hope you guys enjoyed it. See you guys in the lab tomorrow.